Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using the 68 to 70 area as key support, and we saw that the pullback to that area ended up attracting buyers, and the overnight low ended up being the 70 quarter level. And from that point, we've actually bounced up back up towards yesterday's high. So one of the challenges heading into today is really that the ideal spot to buy the market was that pullback to 69 to 71, which is the initial support zone and the overnight support zone as well. And that area has already been tested, and ideally, if the market is truly strong, we don't actually go back down there. If there is a pullback, ideally it actually holds at 72, 75 to 73 quarter. Perhaps we fill the gap or get close to it, and then we actually start heading higher. Because right now, the context heading into today is that of a balanced breakout, and given how strong TF is behaving, if TF can break above the 1260.5 to 62.5 area today, that would most likely trigger a move in the S&P up to 91 to 92 and 94 half to 96 half. Most likely the 94 half to 96 half. So keep an eye on TF. If we get a breakout in the Russell, that would just confirm that the buyers are in firm control here. We know from yesterday's price action that the market is relatively strong and the buyers are in firm control, but from here a continuation move would really be supported if the Russell can break out above 60 half to 62 half. That would really support the upside in the S&P because the Russell is already trading near its all-time high. So heading into today, ideally we don't really want to see a deep pullback in the market. Ideally we actually want to see a continuation move and see the market holding above 69 to 71 and ideally even higher, and just breaking out from here. Now the short-term inflection point above is the 81.75 level and the 83.85 initial resistance, but again, if the Russell breaks out to the upside and continues, then most likely that 83 to 85 is not really going to hold, and the next major inflection point in the S&P above 81.75 is really that 94 half to 96 half area, and 91 to 92 could provide some rotation. It's a good spot to take profit if we do get a breakout and we start stalling in that area. Then that's a spot where we can certainly look to take some profit on the long side. But the next major inflection point is really up towards 94 half to 96 half in the event that we get a breakout. Now, in the event that we actually start balancing a bit more before going higher, any break to the downside can still attract responsive buyers at the 64 to 66 support zone, and then we're going to be using 58 to 60 as the main bull bear zone. So as long as the market is holding above 58 to 60, the buy side can actually retain control. Now again, ideally we don't pull back to 58 to 60. I mean, that would be a signal of weakness, right? That would indicate weakness in the market, and a strong market typically does not put in a pullback. So even though we have those zones down there, those are not the zones that are in play right now. Right now the main scenario is for balancing overnight and then a breakout and continuation higher up to 94 half to 96 half. Now of course, once the market opens, we'll have to see what level of strength we're seeing in the market, and we should be seeing a relatively strong AD line. It doesn't have to be like a trend day AD necessarily, but it has to be positive. It has to be somewhere around plus 1,000 or ideally even higher than that. And we want to see that broad market participation in the upside move. And once we see that, then the Russell should break out to the upside as well. So right now, the primary focus is going to be on long setups unless there's a very clear-cut failed breakout attempt followed by a momentum shift to the downside or something along those lines. If something like that happens, then of course we're going to have to adapt in real time, but the context right now supports the buyers, and the safer setups right now are going to be buying pullbacks into support or even buying mini breakouts from intraday balance areas, as long as there's not a strong resistance zone overhead. So if we balance here even above 73 quarter and then we break out, we can quite easily just go right through 83, 85 and target a move up towards 91, 92 and 94 half, 96 half. And I think the Russell will provide a pretty good heads up. But the challenge really today is that the ideal trade location has already been tested, and we may not go back down to 69 to 71 at this point to allow the buyers to jump in at a good price, and that's very much indicative of a strong market, that it doesn't allow people to jump in at the ideal location. You have to take it at the aggressive spot, or just sit on the sidelines and wait for the market to establish yet another balance area. So right now, that is the context heading into the open. On the econ side, we have the JOLTS number out at 9 a.m. Central. I don't think it's really going to be a market mover, with non-farm already out of the way on Friday, and the strong move yesterday. I don't think JOLTS is really going to be impactful in the market at all. I think right now the price action is very clear cut, and the buy side is very dominant. So I think we're probably just going to balance and most likely put in a continuation breakout. But again, we'll have to wait for the open and see the level of strength that we're seeing in the broader market and whether that supports the upside. But the price action so far has been quite bullish, so that is the side that we're going to focus on. So those are our main thoughts heading into the open. Let's see if the buyers can maintain control today and target a move to the upside, and we shall take it from there.